Hope all of you are doing fine. The FY24 has begun on an optimistic note. The RBI just announced the first MPC for the year, and let me take you through the key policy decisions and the outlook for the month of April 23. They have unanimously decided to pause at 6.5 on the repo rate. The stance was maintained as withdrawal of accommodation with 5:1 vote. The headline CPI projection for the FY24 has been marginally brought down from 530 to 520, while the GDP has been revised upwards from 640 to 650. Both the revisions have been a bit of surprise to the market. They have attributed the decision to the global financial instability. They remain focused on core inflation and explicitly mentioned that decision to pause is for current policy only. Now let's look at the global developments. Despite the financial instability, the Fed has decided to hike rates and probably will hike in the next policy too and take the target rate to 5 to 5.25. They are still negative on real rates and hence may have to keep it higher for longer. This is clearly against the market expectations, which is expecting a cut as soon as in the next policy. If we look at the situation in a cricket parlance, RBI is just like a seasoned batsman who watches a few overs before deciding a shot. Overall, the MPC outcome was a hawkish pause. As highlighted earlier, we are somewhere near the peak of rates and we maintain the same. I am sure you are wondering, was the rhino of the fixed income jungle, the FRBs, effective? Yes, indeed it was effective and gave reasonable safety to our portfolios in the rising interest rate scenario. Given the long pause in policy rates, the effective carry is expected to be attractive in the FRBs. On a hedge basis, it's one of the highest yielding bond in the yield curve. As informed earlier, we shall keep converting our FRBs into fixed bonds. Post policy, the SDL curve has steepened a bit. Hence, 2028 is better than 2026 and 27, and overall 2030 to 33 is relatively best position for the long-term investors. We recommend investors to invest as per their investment horizon. However, they can consider long target maturity funds, actively managed duration strategies in medium to long term, such as dynamic or gilt funds. Thank you. Stay safe, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.